Good morning, everybody. You're all familiar with the cautionary statements, I'm sure, but please do take the time to go and read them. Copies of this presentation, as always, are on the ASX platform, as well as our website. We acknowledge the traditional owners of the land on which our assets at Merlin and Brooking are located, as well as the land on which we meet or present today. We pay our respects to all members of these Indigenous communities and to elders past, present, and emerging. As per the title of the presentation, Lucapa has delivered another very, very strong quarter. We've had many physicals records. We've had a strong operational turnaround at MOTHAE. LULO and MOTHAE are both EBITDA positive. As a result, our guidance is maintained because of the achievements during the course of the first 6 months. We have returned again significant payments from LULO, repaying both the loan account as well as dividends received earlier in the year. As a result, our balance sheet has been strengthened significantly, and we now have no debt on our balance sheet. Some $60 million in principal and interest repaid over the last 5 or so years, a stellar performance. We have ramped up our exploration activities, and I look forward to taking you through the achievements and what we are doing there. We too have advanced our Merlin studies. You'll notice the plural there. We've significantly advanced our feasibility study, as well as the pilot study that we have also started looking at. In terms of ESG milestones, once again, we're very proud of our achievements during the quarter, and I'll overview those as well. Putting numbers to the strong operational performances for the second quarter, as a result of those record throughputs and the turnaround at MOTHAE, we have delivered a record 640,000 tonnes through the plant, 16% increase to the same quarter in the prior year, LULO up 18% and MOTHAE up 15%. As a result, we've had record recoveries at LULO and very, very strong recoveries of plus 10.8 carat diamonds, or specials as they are called. At LULO, 32% of the weight is reflected in specials, and at MOTHAE, 24% of the weight is reflected in specials. We've recovered 16,277 very special diamonds. It is down 5%. But you know why that's down 5%? That is because of the plant modifications that we made at MOTHAE, where we did expect a reduction in the grade, and I'll speak to the improvements and the great turnaround at MOTHAE shortly. But LULO was up 5%, MOTHAE down 14%, and therefore a net negative 5% on carats recovered. In terms of prices, we continue to get strong prices. Our special diamonds are in high demand globally, and therefore the pricing around our productions is very, very strong. We achieved $1,883 per carat. That is up 55% on the same quarter in the prior year. LULO up 45% and MOTHAE up 60%. So notwithstanding the pricing volatility that you are reading about around the sector, you can see that the kind of quality that LULO and MOTHAE produce is still in very much high demand. That has all culminated in record revenues, particularly at MOTHAE for the quarter. As I mentioned, top quality productions and high demand. We have recorded $28.6 million US, or nearly 43 million Australian dollars in revenue for the quarter. That is 31% up on the prior comparative period. LULO up 33% and MOTHAE up 28%. As I mentioned, when you aggregate that with the first quarter, a very, very strong H1 has been delivered. 14% increase in tonnes through the plant, 1% increase in carats recovered, notwithstanding the modifications we made to the MOTHAE plant. Dollar per carat up 36% on the same comparative period prior year, and our revenues are up 35% on the same comparative prior year. LULO up 47%, MOTHAE up 12%, a combined $46.8 million US, or nearly 70 million Australian dollars delivered for the first half of this year. I noted earlier the operational turnaround at MOTHAE. And I just thought that we would present it to you in a revenue per hour, because that is what we have focused on at MOTHAE to try and improve. We've got a number of recovery streams there, and optimizing the balance between the three of those streams is important. Hence, we've commented previously that the mass balance was out. I think that what the work that the team did through the back end of last year, the work that the team did this year in implementing the results of those studies, has made a significant turnaround at MOTHAE. When you have a look at it in terms of the revenue equation, average rough dollar per carat multiplied by the average grade, the carat per ton, you get a revenue per ton. When you multiply that by the plant capacity in tons per hour, you get a revenue per hour. The whole of 2022, we achieved $690 per carat from our sales. We recovered diamonds at a grade of 0.025 carat per ton, culminating in $18 per ton being generated. When you multiply that by the plant capacity of 167 tons per hour, it generated approximately $3,000 per hour in the plant. Those plant modifications that we did in the first quarter, we guided the markets at the end of March as to what we would expect going forward. We guided the market to $1,000 per carat in terms of our average price. We guided the market to 0.021 carats per ton, or 2.1 carats per 100 ton, achieving nearly $21 per ton. That would be a 17% increase on the prior year period. In terms of our plant availability and capacity, the improvements we made, we believe that we could get to 180 ton per hour, which is an 8% improvement, culminating in $3,780 per hour achieved. That would be a 26% improvement on the prior year. That in itself would have been a significant achievement. What we have achieved for the second quarter, which is the first quarter that our plant has run for 3 months uninterrupted, we've achieved $981 per carat at a grade of 2.2 carats per 100 tons, achieving $22 per ton in the ground. We actually have achieved around about $190 per ton, which is a 14% increase, culminating in a 39% increase in revenue per hour through the plant to $4,180 per hour. So therein lies the strong work that has been done, a material turnaround at MOTHAE, and we believe that there'll be many better things to come from MOTHAE going forward. Because of that, MOTHAE is back in the black. The plant mass balance bottlenecks have been addressed. We have focused on increasing that revenue per hour. Remember, we did not want to do any higher cost adjustments or improvements. We wanted to focus on low cost improvements because the proposed VAT and IT amendment, income tax amendment bills are still there. We're waiting on the government to address those, but they have not been addressed as I speak to you today. So we entered those plant modifications and we had immediate success. Record processing volumes, grade carat recoveries better than expected, our average diamond prices increased tremendously, and the operating margin has been returned. I can just show you in terms of a margin per carat and the waterfall graph on the right-hand side, $981 per carat achieved. We paid $68 per carat in royalty and marketing costs, leaving us a net $913 per carat revenue. $732 per carat in operating costs, leaving us $181 per carat operating margin. Through our cutting and polishing strategy, we have added significant value to both MOTHAE and LULO, as you'll see shortly. It has been a very successful strategy, and we are generating significant returns. An extra $100 per carat achieved during the quarter, which is a 55% additional margin to the mining operation, culminating in a result of $281 per carat margin. Now, I'll tell you that that's double the world average diamond price. So as you can see, MOTHAE is firmly and squarely back in the black in terms of an operation. At LULO, LULO continues to do what LULO has always done. Our expansion strategy there over the last 2 years is paying dividends and very handsomely. record mining and processing volumes being delivered, record carats. We're now focusing on expanding our alluvial operations and our exploration, should I say, in developing our alluvial deposits and resource on the mighty LULO River. We're going there for the first time. The road has been pushed into that valley, and we look forward to bringing results of our work there as well. As I mentioned earlier, the polishing strategy at MOTHAE is also paying off handsomely at LULO, and we're generating strong returns. LULO sent back $3.5 million against our loan through the quarter, and another $1.5 million immediately post the Q2 end in early July. But over the last 18 months, LULO has sent back circa $22 million back to Lucapa for us to use to pay down our debt. So significant performance from that operation, and we continue to expect many good things from that operation going forward. Just on the same comparative basis in terms of a margin per carat, if I can bore you with LULO's margin per carat, it is significant. $2,900 per carat achieved during the quarter, $315 per carat in royalty and marketing costs that we have paid, leaving a net $2,576. Against costs of $1,754 per carat, we are left with $822 per carat margin before we look at polishing. $145 per carat achieved on the polishing margins through the quarter, leaving us with close to $1,000 per carat margin at LULO. So as you can see, a very, very high margin mine, a very, very high quality of diamond recovered. It is the best quality production in the world, bar none. And we look forward to many more good things coming from LULO in the future. In terms of how that performance measures against our guidance that we provided the market back in March for both LULO and MOTHAE, as you can see, against the cubes through the plant that we advised, LULO is tracking ahead of plan there. 590,000 cubes we advised or guided. We've already achieved 317,000 cubes through the plant. Now, I'll remind you that Angola has a very, very heavy wet season, and that largely dominates the first half of the year. So from December to around about mid-April, we are, I won't say underwater, but very close there too. So to achieve that throughput and that mining capacity through the first half of the year is very significant. The rest of the year is dry season mining, access to the higher grade Lazeria areas. Those Lazeria areas, as you have seen in years gone by, have produced some very significant stones, and we look forward to providing you with the results and recoveries going forward there as well. From a grade perspective, 5.3 guided, 4.8 achieved. As I mentioned, it is wet season mining that dominates the first half. It is the higher lying terraces that we have to go and access. Those are lower grade, and therefore you will see that we're slightly behind. But with a dry season ahead of us, I think that we will be well ahead of that guided grade in the not too distant future. Carats recovered, we're tracking well. 31,000 guided, 15,000 recovered already. Dollar per carat in US dollar terms, $2,300 per carat guided, achieving 2,326. At MOTHAE, it's the very same story. We guided 1.4 million tons through the plant. We've already achieved 700,000 for the half year. Grade recovered 2.1. We are ahead of that and recovering at 2.2 following the plant modifications. From a carat recovery, tracking ahead of plan there, we guided 30,000 or 29,500 for the year. We're already tracking at 16,000 for the half year. Price achieved, we guided 1,000. As I mentioned earlier, 981 for the second quarter alone, which is the first quarter operating with the plant modifications. But as a first half, we're tracking at 940. So our full year guidance is maintained. And as you can see from those numbers and the half year results that I've talked to earlier, I think that full year guidance is really going to be a low bar. There's a very good second half of the year ahead for our operations. On to our exciting and one of the most exciting programs globally, our primary source exploration program at LULO, which is our most advanced program, where we are searching for those very, very exceptional stones that we're recovering, daily in our alluvial operations. Of importance, we have progressed our majority stake discussions. We have agreed with our partners our majority stake. we have agreed the terms on which we are going to go forward on our next exploration program. So we are just now going through the documentation, the legalities of the mineral investment contract, where we have to present that to the ministry and to the president. So we are going through that program now. So, we're very, very chuffed with the progress we made there, and we look forward to bringing you, those updated documents in due course as well. But our exploration activities are significantly scaled and advanced. I don't think there is anything more that Lucapa can do as a financier and a contributor to the exploration activities there. We have flown the ground. We've identified all of our anomalies. We have drilled, and we continue to drill today, identifying our priority targets and new priority targets. We have sent that core away from mineral chemistry. We have identified the priority targets. We have built the plant that is processing those. That plant is now operating on a 24/7 basis. Okay, it's no longer on a 12-hour shift. It's 24/7. We guided 2 samples every 6 weeks previously. We're now guiding 1 sample every 10 days. That plant, one day when we wake up or at night, we're going to be interrupted, and it's going to produce the goods that we are anticipating. Our geological model that our experts in our office here are following, should I say, is being proven. We are following the model that a handful of kimberlites have provided the significant diamonds that we are recovering, and a vast majority of those kimberlites are going to be barren or very low grade. We are all excited by the recovery of diamonds, over 100 carats already from L164. And once we do more bulk sampling there and delineate that kimberlite, it may well be a standalone mine on its own. But if you had to ask me personally, is that the size of the prize? Is that what we are looking for? The answer is that's one of the things we are looking for, but I don't believe that that is the size of the prize. The frequency, the volumes that we are mining, the diamonds we are recovering, the multiple jurisdictions and that we are recovering, or mining blocks, should I say, that we're recovering diamonds from. There are other diamondiferous kimberlite pipes supplying, those gravels. We're recovering from L164 a grade of north of 2 carats per 100 cubes. We're mining 6 to 15 carats per 100 cubes. L164 could not have provided those diamonds on its own. It's got special stones in it. It may well be a standalone mine on its own, but the size of the prize yet to be discovered, is significant. And I look forward to watching the news flow, from Lucapa in the future, and seeing their good progress that they're going to make there as well. So we'll continue to progress and process those priority samples, and we'll continue to drill, because it will be the best discovery in the last 2 decades in the diamond space, and I'm sure that the team will deliver it. Importantly, without debt, we can also focus on progressing our other exploration initiatives. At Brooking here in Western Australia, and Arapa in Botswana as well. Our team has already been sent to Brooking, where they are doing an auger drilling program. I think today or tomorrow it actually completes. We've identified our material of interest. Our spoils from that drilling program are being bagged and are being sent for heavy mineral analysis and micro diamond analysis. So, we're quite excited about getting on the ground there again, and we look forward to, finding many more lamproites, that are diamondiferous, in addition to the one that we've already discovered there as well. In Botswana, finally, and I say that with a sigh, we're going to get on the ground there. We've had a long, arduous, programming initiative to renew our license there. It is renewed. We are finally going through all of the approvals, and we're about to tick all the boxes there as well. So our team will get on the ground, and we are going to drill those anomalies that we've identified. We hope to prove them kimberlitic, and we hope to, obviously prove them to be diamondiferous in due course as well. But we will also be putting holes into a known kimberlite that has been poorly explored in days gone by as well. So again, reigniting 2 very important exploration programs in the company as well. From a near-term development perspective and near-term production and increased production, growth, replacement production, call it what you will, the Merlin project in the Northern Territory here is a significant program for us as a group. A 4.4 million carat JORC classified, indicated, inferred resource We've published 2 scoping studies where you can see the value and benefit. Those scoping studies have illustrated the positive economics for a long life mine there. We look forward to completing that feasibility program this quarter and presenting the results to the market as well. But we're also looking at other lower cost opportunities there and options. We've communicated to the market a potential pilot program that we could also put in place there. We've identified, low cost scrubbing and screening or front end modules for a plant. And we took the opportunity to acquire the Ellendale alluvial sampling plant when Burgundy exited the Ellendale project there as well. Acquiring that plant provides Lucapa with optionality at a very, very low cost. $1 we acquired the Ellendale plant at, $200,000 we acquired that Chinese plant at. That plant can be utilized here at Merlin, and it can be utilized at LULO as well. We told you we're exploring the LULO River. That plant could be purpose fit for an additional second plant, production plant on the LULO River, but it could also form the pilot plant for a program here at Merlin as well. Importantly, many of those modules could also be used in the final development and commercial production scale plants at Merlin as well. The XRT that is in that alluvial plant at Ellendale is exactly what we want to use in the commercial scale production plant as well. So look, it provides us with opportunities, it provides us with options at a very, very low cost. Merlin also provides us with potential, exploration, a blue sky opportunity as well. There are a number of anomalies there that we need to go and test, and there are a number of areas that we also want to go and test as well to identify new anomalies. We believe a very significant program, and it will add a lot of value to Lucapa. The beauty about Merlin is that it's right here in Australia. Our licenses are secure. We can be patient. We can develop it at our own time. We are debt-free. We can develop it at a measured pace. We don't have to develop it immediately. Being debt-free, the board can allocate capital to many shareholder, value accretive initiatives. And yes, what are those other initiatives? Please read across into dividends, read across into share buybacks, read across into scaling up exploration activities, read across into developing our Merlin operations here. Finally, the value that is generated within our group can be allocated to the assets within our group. We are no longer purely paying down our debt. It is gone. So the platform for delivery has been well and truly set. From an ESG initiative, long before the acronym ESG was coined, we have been delivering on the ground. Our CSR initiatives, our social license to operate, and working closely with our community has been very important to us. You can read a lot more about it in our ESG reports that we released this year, and you can read more about it in your own time here as well. But most importantly, in LULO, in Angola, which is a jurisdiction and culture dominated by a male workforce, we're very proud of our initiatives to address diversity, to address inclusion. And for the very first time, and I believe it's for the first time in Angola as well, we have trained and employed our first ADT operator, female ADT operator. Very proud of that achievement, and I'm sure the team on the ground there are very proud of that too, and I'm sure there'll be more to come there as well. So please just take the time to go and read in our ESG initiatives in our standalone reports. I'm going to spend a little bit of time on the diamond market. It's quite volatile at the moment. Yes, pricing is a little bit up and down, but the fundamentals in the industry are very, very strong. Just look at that dotted graph in front of you there. I haven't gone as far back as 2003 when the diamond market had 170 million carats to deal with. That has come down to 149 million carats in 2018 and to 120 where we sat at the end of 2022. We are losing natural diamond supply in the industry at a rate of knots. I think by decades in, we might well be close to 100 million carats from the highs of 170. 70 million carats lost in supply when you have a rising luxury demand, rising jewelry consumption, rising diamond demand. that can mean only one thing. Prices are going to benefit from that in the medium long term. Yes, we've got current volatility, but that's brought about by global economic woes. War in Ukraine, inflationary fears, rising interest rates, recession in America. There are many things that all industries, not just the diamond industry, is dealing with, and those won't last forever. With a diminishing supply and a growing demand, the only thing that will fill that is going to be price. So from a price perspective, we've operated largely. When I joined Lucapa in the back end of 2014, diamond price index was at around about 227. For the next 5 or 6 years, you can see diamond prices did not go up. They dropped 10%. To scale operations, to develop operations, to bring in producing operations in a declining price environment, I think a very, very strong development or very strong performance from the team. Now, but since the onset of COVID, diamond prices have gone up 41%. Diamond prices are strong. There are fewer and fewer of them being produced naturally every day. And I think that once the global economic woes are behind us, the recessionary fears, potentially the war in Ukraine, we're going to see the positive diamond prices. Already there is growing strong demand for branded jewelry, the kind of jewelry our diamonds go into. And the demand returning in the East is certainly being seen in the results of LVMH, Tiffany, etc., announcing very, very strong results coming out of China. The diamonds we produce at both LULO and MOTHAE are the best diamonds in the world. They are a pocket of pricing strength when it comes to the diamond industry. So when you read the volatility, when you read what's going on, we just ignore that. Our diamonds are in high demand and their prices are very resilient. So why invest in diamonds? From an industry perspective, this graph here, you've seen a version of this in previous presentations. But from December 2018 to where we are today, if you look at the dotted line, diamond prices are up 36% since the beginning of COVID. Okay, and if you have a look at the basket of equities, Gem Diamonds, Lucapa, Petra, Mountain Province, that basket of equities, our equities are down 72%. All of those companies are producing much better cash flows than they were pre-COVID, but our share prices are down 72%. It does not make sense. It's not going to last forever. That gap is going to be narrowed. The cash flow being generated from these operations is going to be realized, and the value is going to be reflected in those equities. So that's why you invest in diamonds as an industry. But why invest in companies with niche high-end diamonds like Lucapa has at both LULO and MOTHAE? Well, if I present the same graph, but this time from May 2020, the depths of despair through COVID, diamond prices have come up 93%. But when you look at the two best diamond producers in the world, both Lucapa and Gem Diamonds, you're looking at a share price that has gone back 48%. There's a difference of 150% almost between where diamond prices have gone and our share price has gone. It does not make sense. Our operations have not gone backwards. Our operations have got better. The strength of our company has got stronger. Our balance sheet is stronger. We're generating strong cash flows at MOTHAE now, very strong cash flows at LULO. Our kimberlite exploration program is at a place that it's never been before and could pop any minute. It does not make sense. So you should be in diamonds, as I've shown you on the previous slide, and you should be in high-end diamonds, such as those that Lucapa produced that I show you on this slide, that I've shown you on this slide here as well. So then why invest in Lucapa? I think the previous 12 or so slides demonstrates why you should be in Lucapa, and if you're not, you need to get in quickly. But we provide significant exposure across the diamond pipeline. We offer the best suite of assets compared to any other diamond company that is out there. Exposure to exploration, the best diamond exploration programs in the space. We will discover the best diamond kimberlite pipe that this industry has seen in the last 2 decades. We've brought in production that will, if we don't develop it now, we develop it in time to come. it is going to add significant scale to us, transformative scale. 150,000 carats per annum potentially from that mine. It will dwarf what we are doing at LULO and MOTHAE considerably. But we right now have the best production in the world, highest dollar per carat production globally at LULO, the second highest dollar per carat production globally from a kimberlite mine. At MOTHAE, $900 per carat there, 2,000 plus at LULO. Those diamonds lend themselves to cutting and polishing strategies, to downstream provenance-driven brands. Merlin, tier 1 jurisdiction. The development of a brand coming out of Merlin is also an important future strategy for the company. Tracing of those diamonds from source to finger is very important. Significant value to be added on all of our production capability going forward. And I've labored already on our partnering profits at both LULO and MOTHAE and the significant value that it's adding there as well. It's an important initiative and it needs to continue. But look, I think the most important thing as well is the team. Those assets don't develop themselves. Those assets require a strong team. Those assets require a strong team here at Lucapa. They require a strong team on the ground at LULO and MOTHAE, and that is what we have. So those assets are where they are because of the teams. The ability to pay down $60 million in debt, principal and interest over the last 5 years is because of the team. Significantly strengthened balance sheet. We haven't thrown the money that our shareholders have given us away. It's gone into assets. It's gone into development. It's gone into production. And look, I've labored for the previous 3 slides on the sector. You should be in diamonds. It's an undervalued sector. You should be in high-end diamonds. It's even more undervalued, and you should be in Lucapa. So thank you. Our future is clear, and I look forward to watching the progress at Lucapa going forward. Before I ask Candice to step in and provide us with the questions that we've received, I have received a lot of questions in the last few weeks asking me if Lucapa's future is secure and fabulous, as you say. Why are you leaving? Well, it's because of Lucapa's future that I'm able to leave. The platform is strong, it's solid, the foundation is set, and I'm able to go and take on other opportunities. It's because of guys like Nick, the team that we have downstairs. It's because of them that I'm able to do so. Being at 8.5 years, loved every minute. The phone call that Miles and the board gave me back then, it's been a great journey. I've enjoyed every minute. But look, the diamond industry has not seen the back of me yet. I've got a lot of things to do. I'm going to be working closely with Nick on the downstream initiatives and the marketing. But I've got other opportunities to go and address as well. People have brought a lot of projects. Governments have asked of me a lot. And it's time to go and address those opportunities and watch Nick and the team deliver the assets and deliver the shareholder value. I actually look quite forward to sitting in the audience at the future general meetings with you, leveling the questions, at Nick and the board and the team. So, it's a great company. You should be invested in it. I'm invested in it. I'm leaving my shares in the capable hands of Nick and the team and the board, and I'll watch them grow the share price. Thank you for the years. It's been great.
Okay, thanks, Stephen. I hope everyone can hear me.
I can.
Okay. Nick, would you like to say a few words to shareholders, given that you are you're the incoming interim CEO?
Yeah, sure. Thanks, Candice. Stephen, thanks very much for those kind of words. And hi, everybody. I think a lot of you guys, if everybody out there does know me, I've been around the same time at Lucapa that Stephen has been here. We were here together. I've been stuck in the back room doing the mining and the fixing of the plants and things like that. The reason I tell you that is that, when we are busy with an executive search at the moment, looking for a replacement CEO, I just wanted to get out there to you that while this is taking place, your company is still going to be in very good hands. It's going to be business as usual. As Stephen has alluded to, I know where he lives. So I'll be able to lean on him if there's anything that is required up to those days. We're going to be out at Diggers and Dealers this year, as well as Africa Down Under. So if there's anybody there who wants to come and say hello, please, I look forward to meeting you in person. Until then, if there's any questions anybody wants to ask, please get hold of Candice or myself, and happy to fill you in the interim. Thanks very much.
Thanks, Nick. Okay, well, now to the questions. We have quite a few questions, some of which, well, many of which were covered in the presentation. So I'll start with this one. Years down the line, when LULO has aged significantly and can't keep up the incredible production we've seen so far, has the company explored other potential options in Angola? The company seems to have a great relationship with the Angolan government. Is there any potential to expand Angolan operations and find new leases or targets?
The answer is yes. We not only develop our own operations, but we continuously to scour, the earth for many other opportunities, abroad, but in Angola too. As alluded to in the question, obviously very strong relationships there. So yes, we have looked at other opportunities there, but remember our assets in Angola at LULO, both the alluvial operations as well as the kimberlite exploration, are very, very high bars to beat. To deploy capital to other programs outside of the alluvial operations or the very prolific kimberlite program we've got there, is tough. We'd rather be focusing on putting money into that kimberlite search there, because we believe that is the best opportunity in Angola. But yes, we have looked at other operations, and there are interesting opportunities in Angola and abroad. But we do believe the best spend of our money in Angola is searching for that primary source kimberlite of those exceptional diamonds. So the answer is yes, we have, but I think from a opportunity perspective, we'll focus on LULO in Angola for now. But from future source and future production, that is why Merlin is in our stable as well. Future production is going to come from Merlin in due course. So if LULO is going to dwindle in many years to come, well, we've got Merlin that will step into the breach at that point in time too.
Thanks. Next one is, Lucapa seems to have a great arrangement with the cutting partnership. Is this limited to the African stones currently being produced, or is it possible that once things progress at Merlin, we could see Australian diamonds also being cut under the partnership?
Yes, absolutely. Value creation beyond mine gates is on every mine, not just the African mines. The potential to develop a premium brand in a tier 1 jurisdiction is very real. And once Merlin is operational, naturally we'll be looking at garnering additional value from beyond the mine gates, and creating additional value from a brand closer to the consumer as well.
Okay, there's another one about capital allocation now that we're debt free. I think you've already covered that. There's also one about, can you please advise if we're any closer to securing a bigger percentage in the LULO project? I think you've already covered that one as well. Last time I looked, this is another one. Last time I looked, Bank of America held a large short position in LOM. Is this still the case? What is being done to manage this position?
Look, we watch the movements in our register closely. We're engaged with all of our large shareholders on a regular basis in terms of their holdings and what they do. Obviously, we can't influence that. That is their decision. But pleasingly, the movement has been very, very low in recent months. But in terms of their position and what they do with it, it's like every other shareholder out there. They will make the decisions that are in their best interests. But pleasingly, the volumes in the top part of our register are non-existent.
Another one on the share price performance. Saying it doesn't look out of place when reviewing Lucapa and Gem and others that continue to trade at their lowest levels in 5+ years. Are we looking at a systemic valuation shift in the minnow diamond sector, which now appears to trade on low earning multiples and decent dividend prospects as the new normal?
Simple answer is yes. I think I had 3 or 4 slides on that very topic. So absolutely.
Last one, confirmation that the SML board approved payments have been received in full. I presume that means that the ones that were declared at the General Assembly last year.
Simple answer is yes. Those that have been declared have been received. We still have a plus $10 million loan that needs to be repaid into LULO from the LULO operations, and we look forward to receiving many more of those repayments in due course as well. LULO has been prolific over the last few years, and we expect that it's going to be prolific over the next period of time as well. And the cash that it sends back to the centre can be allocated to those value accretive initiatives and shareholder value. So the answer is yes.
Okay, there's no more questions. So,
Candice, sorry, just as a closing thought or closing statement from my side, Stephen, I just wanted to put out there to the other shareholders that are listening in, as a word of thanks to you personally for your great leadership, your foresight, and for most of all, your tenacity and going after what you saw as a vision for this company. When we started off here, we were nothing but a tiny little exploration company, and you're leaving it and walking away with 2 cash-producing mines, debt-free, and the whole future of this company open before it. Thank you from me personally. Thank you from everybody else I know on the team. It was great working with you, and we know very well that anything you put your hands to is going to turn to gold or diamond, whichever the case may be. And wish you all the best of luck and greatness out there. And once again, thanks very much.
Thanks, Nick.